The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome to the show. And we're going to have a guest, a friend of mine on from Hong Kong in just a little bit, hopefully. And I think you'll find it interesting, some of the things he's got to say. Owned a pretty big brokerage outfit in Hong Kong, and that whole style of business has changed a little bit, and he'll tell you kind of how it's changed. He was on the institutional side. I think you'll find that really interesting. And as you see these commercials for Interactive Brokers and some of the advisors that have gone to that network, I think that's going to ring a couple of bells. Let's take a first look at the dollar, the June contract. Talked about staying away from this on the short side as we came into these areas yesterday, these 98.06 pre-market. I think we were sitting right there, kind of compressing up into it. We talked about, don't short the dollar. We actually had the close above and then the retest this morning, and that's kind of the, to get outside the profile, to go back and hit that inflection point and move higher. That was just really nice how that worked out. And what do you do now? What you do now is, here's the 240s kind of regulating the trade up. I just kind of tighten up the stops, 98.37.38 down below there. Going to be looking pretty good for this to possibly have some follow through. And again, you got a global race to zero on the currency side. And the dollar, we've got an economy that supposedly is doing much better. And, how do you devalue your currency, i.e. the dollar, while the economy's supposedly doing better? It's quite difficult, but the way they kind of put some degree of brakes on is with the, hey, we're going to be super patient. We're going to be patient. Just seems like, was there, just flat out manipulation like this when back in the day, back in the 90s? I don't, when I started first looking at the markets in the 80s, but I don't remember stuff like this. And maybe this is all new, and we do not know how it's going to end. Obviously, with the dollar ramping up, you got some commodities that are by default repricing themselves, and gold. Here's the situation on gold. And let me just pull this back for 2 seconds. Okay. The daily on gold, talked about waiting for a new box to appear. We talked about this orange bar yesterday, and there we got a new profile. We kind of have, come down. There's not a lot of leverage here. We talked about maybe even this thing revisiting 1172. That may be the case. You got a weekly new box that's appeared on this, sitting down here at the same time. Not a lot of direction on gold right now, even though we had that ramp up above 1200, and then we've got the situation on the weekly and the daily, two new boxes right in the middle of the profiles. And, gold's just kind of directionless right now. So I'd wait for some inflection points to be breached. And let me just try to get my guest on here. And we're going to see if we can get to him in just a second. Everybody's trying to get Skype hooked up here. As we look at the gold, we're going to take a look at crude oil really quick. And we're looking at these commodities, again, based on the dollar repricing. And here we go with crude oil. We talked about, 48.03, trying to buy the bounce, coupled with 48.85. That DMZ kind of fell through. That's what stops are for. Well, I tell you what, June gold. I'm looking at e-signal and using. I'm sorry to go back to gold for a second, but I'm using what their continuous contract is on right now. And let me go back to that. Yeah, if you can see there, I'm using their continuous contract, and that's still pegged to April. I can look at June if you'd like me to. That's totally on the table. Crude oil repricing itself below 48. That was kind of Custer's last stance. I think you got to just sit tight with this until we get back above that 48.03 and the weekly's above 48.80 up in there. That's kind of how I'm looking at crude oil. The dollar may move a little bit higher. That would be not as attractive to crude and all the other commodities. So keep that in mind. Dollar's kind of broken out again. Let's take a look at the XLF really quick. And, I hated to see this personally. Got back up into an inflection point, 24.36, coupled with 24.47. I was hoping this thing would continue to drift down. I had some initial stops right around that 24.07 area. It was kind of unbelievable how this thing ramped up like that. But we basically got into a high of 24.34. That inflection point is 24.36 on the XLF. Pre-market, we're trading 24.20 and some change. Still like this as a short. I think the yield curve's just going to be a disaster for these companies right now moving forward. Let's take a look at treasuries while we're talking about that. And Al, just let me know if you get Joey out of Hong Kong. Here we go. Let's take a look at the 10-year. Still, we caught a bid off of the 128.11 area. Still looking for higher prices on the treasuries, 10-year namely, as we're talking about right now, 129.06 and even higher, 130.20 possibly. Just to cover some usual suspects before Joey gets on here. Euro, again, we got that box that appeared on the weeklies. Let me just pull that up. New box appearing well above price action is bearish, period. That is not a good sign for long. So we talked about trying to get back on the short bandwagon. We were hoping for a rally up into 112.45. That didn't happen. As this thing has drifted down lower, we caught a little bit of a bid off of this 107.02 area down below. We hit a low of 107.13, so 10 ticks off, and now we're bouncing. So what do you do with it now? I'm not a big fan of going long the euro. If you guys have been watching this show, you definitely catch my drift here. I'm still trying to put stops again above these weekly unfair lows and just play that game on down. And the long-term stops are above 110.52 to 111.03. Still trying to hang in here with this. Okay, I think we've got our guest on right now. Joey, are you there?
Yep, I'm here.
Hey, how are you today?
Great. How are you?
Hey, good.
It's good to finally be on. I know we've talked about getting on for like 5 years already. So
it is a real treat to have you. Super treat. Yeah. We've folks, Joe and I have known each other for a long time, and he's actually in Hong Kong. He is pretty well-respected guy in the Hong Kong area as far as some of the trading he's done there. And Joe, if you could give a little bit of your background, I'd like to just kind of get into some questions about some of the things that, as we talked about earlier, are possibly changing in the business.
Sure. My background is basically 20 years in the financial industry. I started out with JP Morgan and FX, kind of Credit Suisse, doing NASDAQ market making on ADRs. Came out to Hong Kong in 1998, right in the middle of the, right after the Asian financial crisis. And basically started covering hedge funds even before hedge funds started trading in Asia. So, started a hedge fund that went to about 450 million AUM, and then started a brokerage right in the middle of right before Lehman went down. We started a brokerage. Everybody thought we were crazy.
That was good timing. Good timing.
Yeah, my mom told me I was crazy. She goes, "Why aren't you working at Morgan Stanley or something?"
Right.
So, and we ended up selling that for a lot of money in 2 years after the markets just went ballistic in 2000, at the end of 2010. So we've been, John and I have known each other since my hedge fund days back in 2005 or 2000. I think we met probably 2006 or 2007.
Right.
And we've been talking, technicals ever since. And I've been working on a kind of algorithmic strategy,
right.
systematic strategy, and John and I have been working together on that for a while.
Yeah, it's been interesting, some of the roads we traveled together. I was in awe, to be honest with you. First time I met you in your office, I was like, what in the world's going on here? You got the view of the Hong Kong, the mountains, the sea, all the buildings, and coming from North Carolina, I was like, my God, this is lights out, and this guy must be doing something right. So what I want to do, Joey, and we got about one more minute before the break here, but if you could hang out during the break, we could come back and discuss this a little bit further. You always talk to me about how this business changes, and from the brokerage side, it's just kind of almost a race to zero, I guess. I just wanted you to expound a little bit on, because the guys out there who listen to the show, they're always interested in different facets of the business. And from the institutional side, which is where you come from, it would be really, really cool for them to hear kind of, what the business model was and maybe where it's headed now, and maybe how that affects the individual investor or when I say investor, I mean the guy who's, doing the minimum $1 million hedge fund deposit or whatever. So
I can tell you from
I tell you what, we got like 15 seconds. We got to go to the break.
Yeah.
Gather your thoughts.
And then we'll come back and
very cool.
Sure.
Very cool. And then we got to talk about some markets too when we come back.
Yeah, absolutely.
Awesome. All right, guys, we'll be right back.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got Joey Zhang on with us today from Hong Kong. Joey, you still with us?
Yep, I'm still here.
Great. Okay, so before we went to the break, the business you were in got a lot of transition right now. Could you tell some of our listeners maybe how that transition is unfolding?
Certainly. When I first started out was in the institutional broking field, and basically we were brokers to all the major mutual funds and hedge funds. Right, and that business was a fantastic business. Everybody paid 20 to 25 basis points in commissions. I'm talking about Asia here.
Right.
And there was a lot of discretionary trading, and you were always picking up the phone and talking to people and talking to traders, and they were making live decisions and trading 20, $30 million a pop, and that's how they made money. That's how you moved markets, and that was the business, and and not only that, but there was a very kind of steady stream of IPOs coming from the Chinese government, the Korean government, basically privatizing all the state-owned companies. So you had billion-dollar deals coming through on a regular basis, funding that business. So you can have literally 50 analysts, a team of 50 analysts covering every company, covering 90% of the companies and getting paid $1 million each, and everybody was happy because everybody got paid. Fast forward kind of 15 years, all the algorithmic trading, the black box trading has reduced average commissions down to less than 5 basis points, if not, 2-3 basis points.
Wow.
From 25. You have, all the basic state-owned enterprises, the big state-owned enterprises from Korea, from China, has kind of dried up. So all of that free money, kind of major, investment banking fees, plus all of that commissions have basically dried up. So now all the major banks, run their equities businesses as basically loss-making businesses, and they rely on prime brokerage, on private banking, on structured products, selling into those private banking clients as the way to make money now. So, so the business that I was in, which is equities business for institutions, that business no longer makes much money. So there are very few institutions out there that can still make money. I think Goldman Sachs is probably one of them that can still make money out of that business. But
yeah, but they're doing proprietary trading, like most of the time.
A lot of the proprietary trading has actually been has been basically outlawed by all the new regulations. So even their proprietary trading, I think, has been basically moved off balance sheet, so that they've separated that out now.
Right.
So 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 the pure equities business is very difficult to make money now, and there are only a very select handful of firms that actually still make money. The rest of the firms are actually just throwing money at it, and they're losing $50-100 million a year just trying to do that business.
My goodness, you were at the right place at the right time. That must have been fun times back then, 10-15 years ago.
Yeah, we had a lot of fun during that time, and probably wasn't as fun as the 80s, because I heard some stories about the 80s that I don't want to repeat, but but we had a lot of fun kind of in the 90s and early 2000s as well. So but yeah, I think all the regulations have taken the fun out of the business, and taken the margins out of the business as well.
We kind of strictly and solely have talked about trading since I've met you, and the brokerage business is kind of long gone when I met you. So if you can hang around, if you can understand, but we got to go to another break. I'd love to just get right into the markets.
Sure.
But if you can't understand,
we'll go through markets.
Good. If you can hang around, that'd be great. Guys, we will be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We've got Joey Jong on from Hong Kong, and Joey, I gotta laugh a little bit. Somebody in the room said, we're gonna talk markets next, and they said, what's to discuss? It goes up every day. Joey, you still there?
Yeah, I'm back.
Okay.
I'm back. Sorry.
Okay. Yeah, I was one of the guys in the den had made a comment I was laughing about. So we're going to talk markets, and they said, "What's to discuss?" It goes up every day. What's
that's the problem. It goes up every day until it doesn't.
I know. Trying to catch the upper part of this and get some moves on the downside has been very difficult. But you and I have been really exploring this Brett situation. You've been adding a lot of input to that. People don't know this, but you've been a driving force behind some of the ETF Bretts that we've got that we haven't put out to the public yet, and some of the global kind of combinations. And man, we really thank you for that. A lot of the guys in the room, they were asking about the Shanghai and the Hong Kong, and what's kind of engineering that bull market right now. Maybe you could kind of make some comments about that.
Yeah, absolutely.
Go ahead.
I think if you look at where the European markets are, the European central banks started kind of on QE path kind of 6 months ago.
Right.
And that market has been screaming one way. So, and literally the Chinese government has only, I guess, started down that path. They started making some comments about easing a couple months ago, and now all the economic data has basically supported the fact that the economy is slowing, and their target rate is their target GDP is still 7%. So what that means is some of this the data that's coming out suggests that it could come under 7%, and that's why over the weekend the central bank has basically said, look, we're gonna look to support the markets and loosen monetary policy because the numbers look really soft. So that's why we had a massive gap up on Monday morning.
Right.
It actually finished. All the markets actually finished near their highs, which is very encouraging. Today we had a little pullback, which is
right
to be expected, right?
I'm showing the Shanghai chart right now, so everybody's looking at that. So go ahead, please.
Okay. I'm actually not looking at that chart right now.
Well, we got top of the box at 37.15, and we kind of have come back almost down into that after the breakout. And I know you and I speak the same language when it comes to profiles, so I'm just kind of your eyes and ears right now.
Exactly. Yeah. So I think as we want to buy the pullback. We don't really want to buy necessarily the initial breakout. I think you're going to get a few days of pullback. Part of the breakout process in China is not just the easier monetary policy, but the fact that, or for Hong Kong at least, the government is actually encouraging mutual funds for the first time to invest directly into the Hong Kong markets. And the Hong Kong H shares, that they call it, is basically they have a dual class shares system where the same company has a Hong Kong listing and a China listing. And the China listing, there's quite a few companies where the China listing is trading at a big premium to the Hong Kong listing. So over the weekend, they also made an announcement that the Chinese mutual funds can actually come in and invest directly into the Hong Kong market, thus naturally kind of narrowing the discount that the Hong Kong, that those same companies, have listed in Hong Kong, narrowing those discounts, which, and it's very encouraging because not only the easier monetary policy, but you have the government supporting mutual fund money coming to Hong Kong. So when you look at the Hang Seng Index and the China Index, which is the HSCEI Index, they've both kind of been stuck in a range, and they're both breaking out. Even the A share, China A share market is breaking out as well. We're looking to buy the pullbacks on these.
Right.
And we'll be adding to the positions on the pullbacks.
Awesome.
Yeah.
Well,
there's actually there's actually a Chinex index, which is basically their equivalent of the growth enterprise, or it's even kind of smaller and more speculative than the kind of Nasdaq. I don't know. It's a very speculative market, but that market has been absolutely screaming, and the ETF that we've been looking at is CNXT, the Chinex index, which has just been screaming. So, and even though it's been kind of overbought at these levels,
that is on fire. Ooh.
Yeah. So even though that is doing really well, if you look at and I was trading my hedge fund back in 2007, so we've seen markets in China go 300%, 400%, 500% up. So,
right. Well, the question everybody has, Joey, is: are we rallying back to 6150 on the Shanghai?
I think we're going to fail that we're gonna make a good attempt at going there, but I don't think we're actually gonna get there.
Right.
But I think even if we get close to it from here, then that's a big move, and that's a lot of money to be made from here to even say 5,000, for instance. Never mind 6,150.
Right. Well, the way I'm seeing it on the weeklies on the Shanghai right now, we got 3406. That's way down there relative to what we are right now as weekly, like the major weekly support. That's coming back and retesting the breakout on the long term. And on the daily, we just talked about those numbers, 3715 and a little bit lower, 3512. So, I guess what you're saying is, we might want to just kind of sit tight and let somebody else try to buy the Shanghai shares up here, and we'll just kind of sit on the bid a little bit lower.
Yeah, but I wouldn't wait too long, because I think what you've seen in the past is also that these markets, if they don't pull back in the next day or so, then just chase it, because they have. What you'll see is the China markets tend to trend a lot longer and a lot further than the U.S. markets, or than any other markets, really. Once you have a pool of money going in, it just keeps going and keeps going, and so yeah, I'm quite bullish on the China markets because of the policy support, the government support. As we come into a slower economy, the same thing has happened in Europe, where the economy is slowed, but the stock market is just completely gone one way.
Revalued itself to
exactly
a weaker euro. So what Joey's saying, guys, is even though Shanghai's broke out, we'd love to see this thing pull back a little bit farther, not try to buy the instrument, on the highs. But if in a consolidation phase, if this doesn't really happen in a significant way, pulling back, and it kind of churns around and kind of compresses above those unfair highs on the daily, you've got to chase it, because that's kind of a continuation pattern. We talk about that all the time. And, you've got the good news is you've got some areas to orient stops around to play that game. And those stops on an intermediate basis below 37.15. And, that's just kind of the way the ball bounces. You got to, as a trader, you've got to adapt, and you've got to kind of look at what the real situation is being presented.
So in terms of, A-share, China domestic A-share ETFs that we look at in the U.S. would be the Morgan Stanley A-share fund, which is CAF.
CAF, okay.
Yeah, the Global X kind of China Financial, CHIX.
CHIX, okay.
Yeah, and then CNXT, which is the growth enterprise, or the Chinex market that we call that. So yeah, those are specifically focused on the A-share, local domestic A-share market. Now the interesting part is that's basically that had been we've had positive breath for that index for quite a while already.
Which one?
For the China Shanghai Comp Index, which
yeah. So that thing's been a no look back breakout.
That thing's been a no look back.
2150. 2150.
Exactly. Now,
seriously,
the interesting part is the new breakout actually is the Hong Kong market, which has actually been stuck in a rut for a long time.
Yeah, I just had that up. Let me give you some numbers. I know you know these already, but 24,789 is that weekly unfair high that we're kind of getting back up above now this week.
Yep, that's right.
So I'm seeing kind of higher lows, and kind of compressing up here. And you think we might just have a pop?
I think so, because for the first time you have like mutual fund money coming through from China. That's a wall of money coming through, And and we've been stuck in that consolidation for a heck of a long time. So yeah, not just the HSI, but also the HSCEI. If you look at that index, that's also got kind of the earmarks of a good breakout there.
Yeah, I've got to pull that up. I don't have that embedded in my HSCEI.
Yeah, HSCEI index. So yeah, if you look at today, we had a pullback into the breakout, which is actually a good level to consider, starting up a position.
Right. I've got the Hang Seng China Enterprises Index up now.
Yeah,
HSCEI.
that's the one.
Yeah.
That's the one. If you see, we've been locked in a consolidation since December, and it's been quite volatile, and we're trying to break out of that level.
Right.
It's basically the easy money from China, plus the easy money from Japan, from Europe. It all fuels Hong Kong, right? Hong Kong is kind of the money center hub. So
you know what? I mean, I got to tell you something. Just personal experience when I came there for the first time to see you. Actually, I was speaking of Bloomberg, so I can't remember why I was there, but ended up going over to your office. I keep telling people, they have their ideas in their head about what the Hong Kongs and the Shanghais and the Beijings of the world look like or whatever. Hong Kong is one of the coolest places. I always tell people it's one of my favorite cities to go to. It is just astoundingly beautiful and the most together, orderly place that and the best food you can ever imagine. All 10 things rolled into one. It's just a great place to go. The real estate there is a little pricey.
Yeah. Well,
but it's a great place
John,
to walk around.
When I actually first got here at the end of 1998, it was right after the financial crisis, Asian financial crisis, Asian currency crisis, right?
Okay.
And it was kind of like a ghost town here. And the real estate here was actually a lot cheaper than New York. And it's flipped since, even though New York has gone up a lot as well, but it's actually flipped. Hong Kong is actually back above the U.S. But when I actually first got here, it was actually cheaper here, and there was a lot of empty storefronts when I first got here, and then we had SARS. Oh
my God, I forgot.
Yeah,
I forgot about
we had SARS. It was like, so it was a really good situation. It was the I got here at the bottom of the bottom, and then we had a few volatile sessions, but Hong Kong has totally taken off now.
Well, I will validate that statement. Joey, thanks for coming on today.
Okay, thank you.
My pleasure again. We will talk. I'll call you after the show, but guys, hang around. We'll be right back for the next break and the closing statements here.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show, and thank you so much, Joey Jong, for coming on. He's just a book of knowledge when it comes to trading and especially things going on in the Asia Rim area. So we really take his words at face value when we talk to him from our company, because he's got such a vast knowledge base. Looking at the S&Ps here right now, unfair highs at 2068.69. We talked yesterday about leveraging off of this from the short side because the breadth was negative, and that's what the deal was pre-market. Obviously, that thing ramped up pretty hard. Again, that's what stops are for. But now we've kind of come back into the ionosphere from the stratosphere, if you will. I'm still looking at this, believe it or not, from the short side. And why? I'm looking at it because our breadths are still kind of in an iffy situation. I don't think we've got breakout leadership on our mind here right now. I mean, this is just kind of, I think we're back in the fair auction. I'm still going to try to pick some battles around 2069. If I get stopped out, I get stopped out. Them's the breaks. But we had a good high probability area we looked at yesterday for the June contract on the S&Ps. And if you guys don't know what bubble T means, send me an email. Here we go. Let's take a look at the NASDAQ. And this is something else that happened this morning and is not good. What's not good? What's not good is we got a double inflection point sitting there, and we got a profile that appeared way higher in price action. That in itself is relatively bearish. Now, does the NASDAQ have a lot to do with the S&P coming off? Yes. The answer is yes. I'm still a little bearish on these S&Ps. Let's see if the DAX kind of got cleared up here or not. Yes, no, they did not. Okay, so we're gonna move on. That's the E-signal. A little bit of issue there. All right, so we're gonna take a look at silver. We looked at gold. Gold's kind of directionless. Silver, a little bit different story. You got a profile of the peer, it's still sticking its head above. If you need to pick a battle alongside, I'm not opposed to it. 1660 with stops down below. That's the way I'm looking at silver. Got to take a look at a couple of currencies we haven't been paying attention to before we go into the next hour with Steve Rhodes. Yen. Don't really totally like shorting off of this right now. This has obviously been a good trade. I don't think this is a long-term situation on the way down. The yen, if you got some points in it based off that 120.34 area, leveraging off that, this is the maximum target rich environment down below 119.43. But again, I don't have a lot of faith that the yen is a great short situation. That's based on some fundamentals and technicals right now. What do you do with the yen? I think you look at the yen for breakouts above 120.34, and that's kind of what I'm looking for. All right. Got about 40 seconds left here. Here we go. Let's move back into the bonds here for just a real quick primer. This is the 30-year. Talked about this, a little bit of a support area, 162.20. What's the story on the 30-year? I think the market's going to come off, and I think the 30-year is actually holding in there very, very well, and will catch a bid and move higher. First target's 164.24 and even higher on the 30-year. Guys, you've been great. Steve Rhodes is next. And thank you again, Joey, from coming on from Hong Kong. And we hope to have him on again soon. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.